Hey, Brad Niccum, Nest Mortgage Group here. Happy Monday. What a great weekend, and what some amazing weather. It's kind of cool to see it warming up in February and being nice and warm outside. Almost as hot as what the real estate market is getting to right now. It's absolutely crazy what's going on. So rates are up a little bit this last week. Still in the high sixes for all of your high credit score loans. When we did get the report of the jobs report last Friday that showed jobs had grown so much, it had a big ripple effect on the market. And stocks and bonds are opening both higher today. And it's a quiet economic news day, but a busy week, highlighted by our inflation report tomorrow morning. So we have the consumer index tomorrow. We have NFIB small business optimism index. We have mortgage apps on Wednesday, retail sales, and the NAHB housing market index on Wednesday, along with the producer price index, housing starts, and initial jobless claims on Thursday. So all these are going to be a big mover to the market this week. We're anticipating the inflation report to show little progress, but not as much as previous thought. With the Bureau of Labor Statistics, who are the ones that put together the job report, also put out this consumer price index. And I know a lot of people have covered the jobs report and the substantial revisions and adjustments, and there are some more to be made to CPI as well. Some of the figures from last year's revised lower in the earlier month and higher in the later months, which changes some of the replacement figures. So the last reading for December showed core inflation at 5.7, and the market was originally expecting to drop to 5.4. But after some of these revisions and quirks within the report, it's only anticipated to drop to 5.5. There's an adjustment with insurance plans and Medicare that occurs in January, which could provide a 0.1% bump. Additionally, we did see a jump in used cars and in gasoline in January. Taking all this into account, we think that we might see a little improvement in core CPI, but not significant improvement. And the question is how the market will react. Will the market like the fact that we still see progress, or be disappointed in less progress than initially thought? Core dropped from 5.7 to 5.5. So we'll have to see tomorrow how that report comes out. In a lot of these reports and a lot of the things that's happening with the economy have to do with a shrinking money supply, which an expanding money supply caused inflation. So the definition of inflation is too many dollars chasing too few of goods. So clearly, the money supply is a very important component. A common measure of money supply is M2, which includes cash, checking deposits, and other types of deposits that are readily convertible to cash, such as CDs. Our friendly Lacey Hunt believes that ODL, other deposit liabilities, is even a better measure. It makes up 80% of the M2 measure and eliminates cash and the retail money market funds. Cash is being accepted at an increasingly smaller amount of places and is not used for big purchases. The retail money market funds are never a real medium of exchange. ODL really looks at the energizing component of the money supply, and it decreased by 1.8 last year, the first decrease in record. We also saw big increases in money supply, well above the long-term trend during 2020 and 2021 as the Fed printed money. But the Fed is tightening. They're now vacuuming up all of that excess money based on the trajectory of the economy. It appears that by summer, most of the excess will be removed. This means we'll likely continue to see the money supply and inflation decrease, especially around mid-year. Of course, this translates to lower mortgage rates and lines up with our thoughts around May 10th of being a great day for the bond market. So a lot of factors in there and a lot of things that are changing. And keep in mind, as interest rates come down, they don't come down in a fast motion. They come down in a very jagged, slow motion. So as we see interest rates can continue to decrease, we may also see, the housing demand increase. We are still closing loans in 24 or underwriting in 24 hours, clearing conditions in 24 hours. All loan types were closing in less than 30 days. Still having a lot of success with appraisal waivers. So if you don't know how to get a waiver for your customer before they put an offer on a house, give us a call. It does help in a lot of the multi offer situations. We did get one accepted on Saturday. So still seeing a lot of people out there putting in offers and still seeing a lot of people in multi-offer situations. So the appraisal waiver can be a real big help. We still are getting people pre-approved 24 hours a day, 7 days a week is what I like to say. Pretty much anytime you call, we're going to pick up the phone and get them pre-approved. Most people call during, that normal business hours are up till about 9, 10 o'clock at night. We're answering our phone. So if you do have someone that wants to get pre-approved, they're kind of in a hurry to write an offer, don't hesitate to call me. It takes about an hour to get that pre-approval done. Also takes about another 45 minutes to find out if we have that appraisal waiver. So leave a little time in there before you write your offer. If you have any questions, you can call me, 317-538-9825. Thanks. Have a great week.